Morning, everybody, and welcome back to Morning Markets on the 30th of June, the final day of the quarter, and what has been a really interesting quarter for asset markets. If we just cast our minds back to where we were at the beginning of the quarter. I'll come back tomorrow and talk about some of those trends that we've seen once we've got the final cut of the data at the end of today. Turning to what, as a team, we've been discussing this morning. We looked at some of the economic data that's been coming out of Asia in particular over the past 24 hours. One of those data points being the PMI data from China. And I'm pleased to say with that release, what did we get? We saw a continued improvement month on month on the PMI data, all numbers coming in above 50 for services and for manufacturing, and that just builds on the trend of the previous months. Digging into that in a little bit more detail to see the underlying components and see how they've evolved. Particularly interested to look at what was happening in export orders for the manufacturing sector. Because as we know, China is very much integrated into global manufacturing, and it was important to start to see an improvement in that export order trend. Now, we don't have a reading above 50. 50 in the PMI index indicates an expansion month on month. What we do have is an improvement from the rate of decline. So last month we came in with a number of 35.3 for export orders. This month it's 42.6. So giving us a sense of improvement, albeit gradual. And I suppose that's understandable when we think about the gradual release of lockdown, for want of a better way to describe it, over the past number of weeks across global economies. Also in Asia, we had industrial production numbers from South Korea and Japan, two economies that are very much linked into the industrial side of the global economy and the technology side in particular for South Korea. And we saw, I think, probably a slightly disappointing number from both of those countries, with industrial production continuing to decline on a month-on-month basis, -6% in the case of South Korea and -8% in the case of Japan. So that just speaks to, I suppose, the ongoing challenges of economies coming out of lockdown whilst trying to deal with COVID-19, which remains front and centre of minds. That was something that was touched on by Jay Powell, the chair of the FOMC, yesterday when he was speaking. And he just, I suppose, was alluding to the ongoing recovery that we're seeing in the US economy and the data points that we've been touching on over the past number of weeks. But he also did just really bring back to the table that point that we need to continue to observe what's happening with COVID-19 and how that can result in lockdowns again occurring. And that's what we are seeing in the US in a selective areas. But again, that just speaks to the ongoing challenges of seeing economic data continuing to improve when we have to go back into those situations. And that's very similar to what we're seeing in a number of other markets. Overnight, we've Melbourne taking similar measures in some areas. And even in the UK here, we see the announcement with Leicester in the past 24 hours as well. So that just speaks to the challenges of how economies try to reopen and see growth returning and resuming such that it can support economic activity and employment over the coming months. The other point that I wanted to share this morning that I think is important from a European perspective, there are a number of reports that suggest that Angela Merkel has been able to gain the support of a number of parties, including the Greens and the Liberals, to agree with and to bring a motion forward that supports the ECB in their bond buying programme. And this should be able to deal with the judgment that came from the German Constitutional Court that challenged what the ECB was doing. Removing that impediment would be important, and I think it would signal how committed Germany is to trying to move forward with some of the proposals that we've seen come out of the EU for supporting the Eurozone in its entirety over the coming months. The other point to just finish on today is that we'll get GDP data for the UK this morning, which is likely to show a decline and will indeed show a decline for the first quarter, and a sequential decline relative to that of the first quarter. I think what can we say here? a lot of headlines will be probably made of the fact of what the decline means and the decline in taken in the context of the recent past. However, it is backward looking, and that's what I'd really stress. The market isn't really going to focus on that. Asset markets are forward looking, they're discounting mechanisms. What's the market looking at? It's looking at how we get growth back in the economy, how we reopen the economy. It's looking at Brexit and how that evolves. And it's also looking at the fiscal plans that the government can set out to support ongoing recovery and growth. So yes, headlines will be made of it, but from an asset market perspective, I'm not that convinced that it makes too much of a difference given the historical nature of it. That's it for today. Please join me again tomorrow. Thank you very much.